Ladies and gentlemen, good day and welcome to the ZIM Laboratories Limited Q2 and H1 FY24 earnings call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Sharma from Go India Advisors. Thank you and over to you, ma'am.
Thank you, Darwin. Good afternoon, everyone, and welcome to the Q2 and H1 FY24 earnings call of ZIM Laboratories Limited. We have on the call Dr. Anwar Daud, Chairman and Managing Director, Mr. Shyam Mohan Petro, Chief Financial Officer, Mr. Zulfikar Kamal, Director Finance, Dr. Chandrasekhar Mende, Executive Director and Chief Executive Officer, ZIM Health Technologies Limited, and Mr. Zain Daud, Investor Relations. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request the management to take us through the financials and the business outlook, subsequent to which we will open the floor for Q&A. Thank you and over to you, sir.
Thank you, Deepika. Welcome esteemed shareholders and analysts to the Q2 and H1 financial year 24 earnings conference call of ZIM Laboratories Limited to discuss our company's financial results and operating performance. I hope all of you had a chance to review the financial results and the investor presentation that have been uploaded on the exchange. Q2 FY24 saw improved performance for the company with a 27% quarter-on-quarter growth in the total operating income and EBITDA and PAT margins improving to 12.5 and 4.8% respectively for this quarter. Total revenue from exports was 678 million, a 25.8% quarter-on-quarter growth. Contribution from exports was at 79%. Our pharmaceutical business grew 37% quarter-on-quarter, contributing 740 million in Q2 financial year 24 or 86% of the total operating income. In Q2 financial year 24, our new innovative product NIP revenue grew by 53.6% quarter-on-quarter, reaching 72 million, while oral film revenue reached rupees 37 million, a 62.6 quarter-on-quarter increase. Together, the NIP and OTF, our new initiatives now make up 13% of our total revenue, amounting to 109 million rupees. The quarter also saw some key product updates. We filed one NIP dossier in EU in quarter 2 24, making it the third cumulative filing for NIP in EU. The OTF business saw its first commercial order being supplied in Europe for sildenafil cyclose 50 mg ODS. Our marketing partner in Canada also received marketing authorization for antiemetic ondansetron OTF product using ZIM's dossier. In terms of marketing authorization for ZIM's portfolio, ZIM obtained 6 marketing authorizations for finished formulation in ROW and emerging markets, and our marketing partner submitted 8 OTF registrations using ZIM's dossier in pharmacy and ROW markets, while 12 finished formulation dossiers were filed, comprising 8 from ZIM and 4 from the client. Additionally, 9 NIP dossiers were submitted in pharmacy and ROW markets. The company's geographical mix is also improving, with Asia and India contributing higher percentage compared to previous quarters. We are also seeing steady growth in the revenue from EU, LATAM and other regulated and pharmacy markets, with contribution reaching to 7% of total revenue in quarter 2 year 24. We continue to maintain our focus on research and development, with R&D investment accounting to 9.4% of our total operating income in quarter 2 financial year 24. I now welcome Mr. Shyam Patro, who will take us through the financial highlights.
Thank you, sir. Good afternoon to all our esteemed participants. Let me present the overall financial results for quarter 2 financial year 24. In quarter 2, our total operating income stood at rupees 858 million, marking a 27% increase on quarter-to-quarter basis. EBITDA for quarter 2 amounts to rupees 107 million, which stood at 81% on quarter-to-quarter basis, with an EBITDA margin of 12.5%. While the PAT for Q2 was at rupees 41 million, and the margin stood at 4.8%. Exports, which make up a significant portion of our revenue, constituted 79% of our total operating income. Our ongoing commitment to plant and machinery upgradation resulted in rupees 339 million being added to our gross block for the H1 financial 24. Our R&D investment for Q2 was at 9.4% of the total operating income, while we spent rupees 81 million on specifically OPEX, facility, deal studies, and registration in quarter 2. That said, we remain strong in terms of our balance sheet. Our borrowings for H1 stands at rupees 601 million with a leverage ratio of 27%. The finance cost also declined to rupees 12 million, a decrease of 30% on our quarter-to-quarter basis. I would now hand over the floor to the Managing Director to start his closing thoughts. Thank you.
Thank you, Shyam. We hope to continue on the progress of this quarter and keep working towards our strategic goals. We would now like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, sir. Good afternoon. Sir, I just wanted to understand if you could you give a ballpark number of revenue contribution from your top 10 molecules, sir?
Top 10 molecules, actually, we have not disclosed, but they are in the range of about 57%.
57?
Yeah.
Okay. And sir, on the second question was like, the ODF business accounted for approximately 4%, while the NIP business contributed around 8%.
Yes.
Looking ahead, what are our expectations regarding the contribution from the segment and any specific geographic region that you're focusing on right now?
Just now, as you can see, the filings in the regulated markets are taking place and more and more of those, the translation into business from these filings will be, as we have projected, in the second half of 25. But that's our projection. But as you can see, there are several filings in the ROW and emerging markets, and in those areas we see very welcome acceptance of these products. And you can see the contribution this made in the last quarter. We think that the NIP and the ODF business will see an overall increase in the coming quarter of this financial year and the next one, and also as a percentage of the total business.
Okay. And sir, when we met on the plant visit, so there we discussed that you recently launched a new product called Sasa in Europe, and you are actively working. So any update on that?
The update on that, yeah, it's been supplied. The first supply has taken place, as I said.
Okay. And
the order will be accepted, and that's from only one partner. The product has also been registered using our dossier with another partner as well, and the supplies, the orders are there with us. So as you can see, the OTF MA was the first to come in, and the business related to that has started and it's showing an increase. And as the different partners in different areas in Europe and the regulated markets start launching these products, the business will see a natural growth.
Okay. One final question, sir. You are also developing Suboxone that time when we met. Any update on that?
Yes, development is the chemical part of it is over. We are waiting for the co-development partner to come in and we'll go in for the bivalent as well.
Any tentative timeline or something for this?
At this moment, because the partner, in the court of the partner, because the partner has to finalize the bivalent protocol, the study center, and all those things. I hope we will be able to conclude the preliminary work that needs to be done before the bivalent begins by December. But not an announced decision to make. There's a partner involved in it. Hopefully, by December or by March, we should have the bivalent.
All right. Okay, so that's it from my side. All the best for the coming future. Thank you.
Thank you. The next question is from the line of Darshil from Crown Capital. Please go ahead.
Hello. Hi. Hope I'm audible, sir. Yeah. So congratulations on a great set of results, sir. So just wanted to know what kind of guidance that we may give for FY24 and FY25 with our new launches coming in. So any terms of revenue and margin guidance that people.
25 is too early to call at this moment, I feel, because so many things are happening. The company is in transition. A lot of we expect that we will start hitting early numbers in 25 for the regulated markets as far as the NIP products are concerned. But at this moment, we wouldn't like to give any forward-looking statement on that, any numbers on that. However, in financial year 24, the order position is robust and we seem to be bouncing back from the external problems that were there in the first quarter. The order position is robust at this moment, and we think we will be able to repeat the performance of last year.
Perfect, sir. We'll be able to maintain last year's revenue. And in terms of our margins, sir, that will be able to get to last year's margin, as there seems to be some pressure on it, sir.
I think so. Maybe Shyam can add to that. See, definitely giving a ballpark number and a forward-looking statement will pass now. We're not we're a bit optimistic about the H2 rather. For revenue run rate will remain same or at par with last year's number.
Yeah. Perfect.
Due to the operating leverage, what we have.
Okay. I just wanted to get a sense of margins. Margins will see sequential improvement, right? So revenue, we are pretty. Yeah. Okay.
Yeah. As you can see, the difference between the quarter 1 and quarter 2, there's a very interesting operating leverage we have. The moment it starts going above a certain number, all the numbers and margins improve.
So what would be that level where after we see more disproportionate margins? So 100 CR is the number where we'll be able to do 13%, right? So is that a fair assumption, sir?
Yeah, at least. It's a fair assumption.
Oh, perfect, sir.
Unless there's a product mix and the market related, the market related product mix and the market mix will make a difference. But more or less, it's a fair assumption.
Oh, perfect, sir. I just wanted to know, sir, any kind of macro environment risk that you are seeing that that could maybe hamper our recovery. Anything that you could point out that we will be able to that will be a speed bump for us, maybe.
We couldn't make out here. Can you
hello, is this better, sir?
Little better now.
Yeah. I just wanted to ask that do you see any kind of a risk that, maybe, this is a factor that can hamper us, any kind of, that part?
Normal business, we have made these filings. Now, how soon the registrations come in and what has been, we have been, as conservative as we can be about when the filings will come, when the MAs will come in and when the registration will come in, but one never knows about these things because they are not in our hands.
Oh, perfect, sir. I think that's it, sir. Thank you so much, sir. All the best, sir.
Thank you. Thank you for your.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Abhishek Agarwal from Prithvi Finmart Private Limited. Please go ahead.
Hello, sir. Thanks for the opportunity. In the investor presentation, you stated that Nutra business have yet to fully rebound from the currency crisis effect in Q1 FY24. Okay. So when can we anticipate the situation to stabilize and what potential consequence could it have on the revenue and margin projection for the current fiscal year and next year?
The order position that we have now itself shows a steady increase in the nutraceutical business. We are growing in India, Asia, and Southeast Asia as well. So there is a lot of de-risking coming in the coming quarters. And these numbers can, because we have a 3-month view of, because of the orders that we have, we can only give a 3-month view at this moment. So it looks like in general the Nutra business is something that I don't know what kind of effect it will have on the margin. For a very simple reason that as we go into from ROW to emerging and regulated markets, the margin in general improves. So probably by this quarter end, everybody will have a better feel on to what extent margins and other parameters, other indices will be impacted, but to what extent it will be positive. In general, I can say the margins and the numbers are positive because of the orders that we have in our hand.
So,
including the Nutra order.
So you mean to say whatever existing order we have, so that is that look like that we will stabilize our nutraceutical business in the upcoming quarters.
Yeah, to what extent we can't say, but certainly it looks like it is stabilizing, and the next 2-3 quarters we feel, although we can't say with any certainty looking at how it will play out, but it's towards normalcy, it's towards normalization. The margins are improving. There is a greater what the kind of nutraceutical business we saw in the last year. A lot of that seems to be coming back.
So the currency crisis which we have faced from last 2 quarters, do you see that it still persists in this market?
It seems to be easy.
Okay. And sir, one more. Is there any geographical concentration risk associated with the nutraceutical business, particularly considering that its revenue has been bounced back compared to the positive recovery seen in the pharmaceutical segment?
Yeah. So especially in MENA region where we have our nutraceutical, big chunk of the nutraceutical business was there. Currency issues certainly affected the orders, but as I said, it seems to be easing in those areas, as well as we see that a lot of the nutraceutical business is now also coming from India, Asia, and Southeast Asia.
Great, sir.
So there is a de-risking at that level as well, as far as Nutra business is concerned.
Okay. Do you foresee any impact because of a recent geopolitical issue in the MENA area because we have the largest presence in the ROW market?
No, it's unusual. We don't see. I mean, besides what we said in the first quarter and the effect on the Nutra business because of what we I've stated already because of the currency crisis, and this is what we learned from all our partners in the MENA region. That also seems to be actually regularizing. So,
sir, actually, I'm talking about this.
Don't affect pharma business that much. Pharma and infra business.
So actually, I'm talking about this Israel and Palestinian war issue.
No?
So
will this either in Palestine or in Israel?
Okay.
And I mean, we are far away from there. So
okay.
That's not the risk for sure.
Okay, sir. And sir, my last question. Currently, we are mainly present in the ROW market and farm emerging market. And our product launch and approval pipeline is not looking strong for the regulated market as of now. So when do you see that significant contribution coming from the regulated market, and how significant it can be for our overall business?
I think by the second half of 25, you will see a good traction because those are the normal timelines after submission. And the volume and all these things will start increasing because after the first submission, then the moment you submit, then there are a lot of agreements which get signed. And even if the agreement gets signed in this year, after the first MA, there is a period of 5 or 6 months in which the other partners and other areas where the MAs are not submitted would get registered. The MAs would come from the local European areas and the other regulated markets where submissions are made on the basis of an existing MA. So those are quick, but they also take some time. So volume builds up over a period of time. So that's what we think. Our management, we think that by financial year 25, later half, you would see the significant traction in the regulated markets. We do see the NIP products in the ROW and emerging markets also getting registered and showing an increasing trend in the sales coming in from there, as we have said already, and that is going to increase. And those margins are also they will contribute positively to the entire balance sheet. And I think Dr. Bande can add to that related to some agreements and other things we have signed and the biopolis and other things which are going on.
Hello, this is Dr. Bande. As you are aware that we are in the process of filing, and we mentioned to you that we have done the 3 submissions already, and 3 submissions is due in the H2. Now the submissions are under review, and we are expecting that all the procedure, there is at least a procedure of 1 year, means 210 days, which generally extended up to 1 year, will get over by the 24 end, and then subsequently in the second half of the 25, we will see that there is a significant difference in the most of the NIP products. And these regulated markets are the Europe. We are already submitting in the Europe. Also, we will go to the most difficult markets like Brazil in the second half of the 25. So this will bring a lot of change from the revenue in the regulated market.
Okay, sir. And sir, whatever product pipeline we have, is it more on the OTC category or is it prescribed category?
It is on the prescribed category. What we are submitting, most of the products are in the prescribed category in the regulated market.
Okay, sir. Great. That's from my end. Thanks, sir. All the best.
Thank you.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Naman Bansali from Perpetuity Ventures. Please go ahead.
The first is on the industry side. So how do businesses like you typically go about incorporating the cost of API usage into the pricing structure? And generally, how long does this process usually take to implement?
Can you repeat the question, please?
I'm asking that how do businesses typically go about incorporating the cost of API usage into their pricing structure, and how long does this process usually take to implement?
I would like to answer this question. Say, we are always having a structure where we decide on the particular cost of the API in the ratio with the finished product formulation. Below that, we don't go. And generally, we have a very good and reliable sources for the API. Generally, we have two sources of the API. So we are risk-free and we are managing well within our expected cost of the API in tune with the formulation cost.
Okay. Got it. Sorry?
Does that answer? Does that help to clarify the question?
My second question was on the model which you follow. So on the marketing model side, do you have field force or do you run on a total partner model with the companies or the distributors which you have?
Yeah. We don't have feet on the street. We don't have a sales force in the market. We have business development team who actually build long-lasting relationships with the different partners who are strong in their local market. And we engage with them at different levels. We can, if we have an already existing MA, we can transfer the MA to them, or we out-license our DBA to them and they file with their brand. But we do have, in all cases, a supply agreement with the partner, which is very long-term, almost as long as the business will be there. And this helps us because we don't transfer any technology to any other plant or facility excepting our own. Is this the right clarification for you?
Yes. That's it from me.
Thank you. Thank you. To ask a question, ladies and gentlemen, you may please press star and 1. The next question is from the line of Kunj Nandwani from Concept Investwell. Please go ahead.
So, hello sir, thank you for giving me the opportunity. First on general business understanding question. So how our supply chain works in both our PFI and finished formulation businesses, especially on a PFI side, how the sourcing works and what are the key geographies on which we are currently depending on.
Can you answer the supply chain thing? In supply chain, that doesn't differentiate between PFI and formulation because under PFI also the major component is API. API is sourced from the same approved vendor only, and all APIs we have at 2 vendors, minimum 2.
Okay, sir. So on a API side, in PFI, our client is not giving us the raw material, right? We have to source on ourselves.
No, the client that is like your job of basis. We are not in that field. We are not in contract manufacturing. We actually out-license and sell. And we leverage, this is the way in which we leverage our IP. The transfer prices include the profit and premium in proportion to the kind of IP we have for the product. And we also collect our out-licensing fees from the partner.
Okay. So also, could you offer an outlook regarding the margins and R&D expenditure for FY24 and 25?
The absolute number will remain same, will improve, but our R&D expenses are normally 7 to 8% on overall revenue.
And on the margin side?
Margin that run rate will remain same.
Okay, thank you, sir. That was it from my side.
Thank you. Participants, to ask a question, you may please press star and 1. The next question is from the line of Anil Sharma from ED Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Just a couple of queries from my side. One was I wanted to understand in terms of any instances or any, where our business has actually benefited from drops in API prices. any kind of a significant drop in API prices, and how have we benefited from them? Secondly I just wanted to check any upcoming products in the pipeline that you can highlight, which is expected to be introduced over the course of next, probably, let's say, a quarter or a couple of quarters. Yeah, thanks.
See, because we are, geared towards entering the regulated markets, and we have long-term contracts with partners from whom who are the approved vendors. The dossier that we make also contains the dossier of the DMF of the API manufacturer as well. They are supposed to provide all the details and other information that is required by the approving authority wherever the products are submitted. I am just giving you this background to inform you that drops or increases in API prices are modulated with long-term supply contracts. So unless they either drop beyond a certain level or they increase beyond a certain level, we are protected from that. But we always factor in gradual drops in the prices of APIs over a period of time as the product gains traction and volume improves. So we are expected to drop our prices as well. Margins, we have seen, with my experience, margins tend to increase slightly over a period of time as a result of whatever is there, but it's slightly. Whatever we put in there are no commodity-related swings in prices as far as ZIM business is concerned. Either upwards or downwards in the margin due to the prices drop in the API or increase in the API. The upcoming products in the pipeline in next two, I think we normally don't disclose this. We will be making disclosures for you relating to our submission. So we have the NIP products which are already on the website. Whatever we develop for confidentiality and reasons of protecting the company's plans for the future, at this moment I'm not at liberty to disclose. For sure, as we keep our submissions and bioequivalences and partnership agreements they get signed over a period of time, certainly we'll disclose at the appropriate time and place.
Okay. Thank you so much.
In general, I would like to add here, the company is in the business of complex and difficult to manufacture products. And we try to solve a problem. We identify products where a problem is sought to be identified and solved by the company through its technology and IP. And these are the kind of products we will see in the future.
Okay, sure. Thank you again, sir.
Yeah. Thank you. Participants may press star and 1 to ask a question. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Hello, audible, sir?
Yes.
Yeah, good afternoon. Sir, I think in one of the previous interactions that that is publicly available, you mentioned that you see that financial year 25 to be the year in which a lot of the efforts that you've done in terms of NIP or getting into regulated markets sort of getting fructified in terms of financial numbers. So I just wanted to understand, if you can just maybe, so first question is, do you still hold on to that statement and do you see FY25 numbers improving substantially for you? And if you can just maybe talk a bit more on that, like how much, or whatever you can share.
At this moment, it's difficult to give you a number because 25 is at least, we are in this current year, 2 more quarters to go, then 4 more quarters in the next year, right? So we are between 6 to 8 quarters away from where the numbers start kicking in. Only in due course, after 2 or 3 quarters, maybe we will have some idea because we are signing several agreements just now. And we have commitments from the buyer, from our partners for certain numbers. This is all there are a lot of market dynamics involved, where, it's not it won't be prudent to share numbers which are at this moment being signed because things change in 1 year and 1.5 years. You've all seen that changing. So we still hope to see the financial year 25 numbers according to the strategy, according to the projections that we have already made and the public domain.
No, sure, sir. No, I understand. I mean, things can obviously change. No, what I'm saying, I mean, for example, I noticed that you disclosed the sales from NIP and OTF for the first time now in the presentation. So, I mean, one way to say is that there are 6 to 8 quarters still left. The other way to say is that only 2 quarters left in FY24. So, I mean, what I'm trying to say, I understand is that all the efforts that you've done, are they on track for you to sort of see the fruits of that?
They seem to be
sure.
On track, and you will see a further traction in terms of the NIP and oral film products that are in the regulated markets, and also particularly all the registrations and filings that are being made in the emerging markets as well. So certainly we can say there will be a positive trend, and I said in my original opening remarks that over a period of time you will see these products contributing to the overall revenue as well as making a positive impact in terms of the margin.
Sure. That is it from my side at this point of time, sir. Thank you very much. I'll come back in the queue.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. We have no further questions. I would now like to hand the conference over to the management for closing comments. Over to you, sir. Excuse me, sir. If you have any closing comments, you may proceed.
Thank you, and we wish to see you again in the next quarter call, and wish all of you a happy Diwali in advance and a prosperous New Year in the coming days. With that, thank you very much for giving us this time to explain how we are doing and what plan we have. More or less, as I said, we are on track and we are confident.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.